So we're now going to talk to Craig, and let's just make sure we can hear him okay. Good morning, Craig.
Hi, James. Yeah, how are you?
Good. All working? Yep. Brilliant.
Yeah, all good.
So you sent me some slides over, so we'll have a look at some of those. So really, I think we're just trying to get a picture of what you're trying to do with the trust, and also how it's been doing. I know it's been one of the best performing, well, actually the best performing fund of Vietnam over the past year. So we'd probably quite like to know why. I think given the time, we're going to run on slightly late today. So we'll probably run until about 12:05, that's okay with people. So over to you.
Great. Well, look, thank you ever so much, James. It was a pleasure also to have Andrew. I've read his book. It's a great book. Thanks for that. So the trust, as you mentioned, James, was the best performing Vietnam fund last year. It was also one of the top 3 UK investment trusts last year. So although it's a Vietnam fund, single country fund that Andrew mentioned, it's good to have the managers to talk about. We're listed on the London Stock Exchange. I think also, actually, if you look back over a number of years, 10 years or more, there's strong outperformance against the index in Vietnam. And actually, we outperform on a 1, 3, 5, and a 10-year basis. Now, this year, our portfolio is down about 10% year to date. The market's down about 17%. So again, we're outperforming even in a weaker market. But we think the market is tremendously well positioned. We think there's good opportunities across our core sectors. And what we do really is simple things. We're able to be nimble because we're kind of right sized for the market. We're laser focused on equities in Vietnam. That's all we do. We've got a team of 14 people on the ground in Ho Chi Minh City. And our style, I think Andrew mentioned, what is style? Does a manager have style? Well, our style is engaging with our portfolio companies. Got a concentrated portfolio of 24 holdings. And we engage with them on ESG. That's not to be fashionable, but it's to provide them with information about how they can position themselves as better companies in their own investor relations. It also protects our downside and helps us filter the great from the good. So our style and our approach is to do simple things well, build a solid portfolio, actively managed. We're not index driven, so we're a very active owner. And that nimbleness really helps us both across the firm sizes. We can invest in the small, the medium, and the large cap. Our portfolio is probably about 2/3 over $1 billion of market cap. But many of those were small and medium cap companies when we first invested in them, and they've grown well. But also nimble around our portfolio construction and allocation. So, we've managed to outperform the market, we've outperformed our peers, and also Vietnam as a whole has outperformed, the broader EM market and the frontier market, and is also not so correlated to the world index, about 0.35. So we think Vietnam's a great place to be. We're, a committed, focused manager, right size for the market, and demonstrated good outperformance, not only on that financial metric and outperforming the index and returning, last year 63% in NAV to our shareholders, 82% in shareholder return, but our carbon footprint is also about 32% better or lower than the index. So that's something we report on, and we help our portfolio companies. We meet with them, we engage with them, even though we're perhaps the smallest of the 3 London listed investment trusts. We've got the attention of our portfolio companies. We had one of them join our webinar earlier this week in Vietnam. So active on the ground and really focused on unlocking simple values from the great macro story in Vietnam. And for that, that's the industrialization opportunities, the urbanization, and the domestic consumer. If you were to put us in a box around a theme, we would say we're growth at a reasonable price. We're looking for good businesses that have got 20% plus more in terms of earnings per share growth. This year, our portfolio is looking at north of 30% earnings per share growth, and yet on a relatively cheap, compelling valuation, about 10 times PE for 22. So actually, the market sell-off early part of last few weeks in Vietnam make it even more compelling, I would say, around that. So if you can find these companies, compounding earnings, engage with them, when they're on track with their commitments to what they're doing for their shareholders, which includes us as the investor, then we're able to engage and monitor those businesses. And so for us, that ESG tool, it's something we've been doing for 10 years, committed to our portfolio, and that integrates in our top-down and bottom-up approach. So we're not looking for memes, we are looking for themes, but we're also looking for great businesses with management who we can engage with. They'll take our meetings, we'll deliver value to them in terms of perhaps training and putting them in contact with people that can help them in the ever-increasing world of reporting on sustainability and carbon footprint, that kind of thing. But be very active and not take our eye off what's happening in Vietnam. It's a very exciting, high-growth market, but you've got to be plugged into it. You can't manage a portfolio in Vietnam from London, Edinburgh, New York, or whichever capital you want to be in. You've got to be active on the ground. So through that, I say we've generated good long-term results, and our portfolio is concentrated around our key themes. You can see that in our portfolio, about 2/3 of our portfolio in our top 10 companies. Many of these investors that perhaps follow us and track us will be very familiar with. FPT has been our #1 company for a number of years. It keeps on growing at 30% EPS growth. It's a digital champion in Vietnam. It has a large broadband business, a pay TV business, a massive education business where it trains the engineers of the future in Vietnam, as well as solving all the thorny IT problems for many Fortune 500 companies. Mobile World is a large omni-channel retailer who's seen its business really transform because of COVID and the move to more click and collect and e-commerce. And Gemadep is one of our logistics champions. We had them on a webinar this week, looking at how the Made in Vietnam story, this big move of manufacturers to Vietnam for exporting a whole range of products globally, is continuing, and export growth is very strong. So we like logistics, we like the consumer, we like the industrialization opportunities. And we also have several banks in our portfolio. And banks last year did a tremendous job for us in terms of contributing to our growth. We took some profit and we're reallocating a little bit more to the banks. But the banks in Vietnam are in a reasonable position. They're looking at 8% credit growth for the first 5 months, maybe 16% full year. Net interest margins are good, 4 to 5%. And their earnings per share is growing from 30 to 50%, and yet relatively low levels of non-performing loans. So Vietnam is a growth market. You can find good businesses, and if you hold them for long enough, they'll compound their earnings and deliver good returns to our investors. So we're nimble across the market, nimble across the firm size. We like these key themes of domestic consumption. Vietnam's now got $3,000 per capita GDP, meaning it's consuming. It's also a increasingly modernizing country. There's a lot of investment going on into infrastructure. And we're seeing that reflected. I agree with Andrew, you don't see GDP immediately reflected in the stock market, but Vietnam's macro certainly does contribute to one of the positive reasons to invest in Vietnam. And if you look at our performance, let's say over a 10-year period, it's been very strong, outperformed the local indices, but also the regional and global kind of emerging market opportunities. I think if you took over a 5-year basis, it's also outperformed China and India. So maybe interesting for people that just think, well, emerging markets, I'll give that to a manager and they'll take care of that. Actually, Vietnam could be a place of diversification for your portfolio. It could be a source of differentiation, and it's not so correlated with the other markets. And as Vietnam Holding is listed on the main board of the London Stock Exchange, investors can make their own decisions about which countries in Asia they like, and they don't just have to listen to perhaps a regional manager. So we want to do things simply, do it well and consistently, and drive good value there for our investors. For us, I think one of the interesting things to note is what we're trying to do is very much aligned with what the government of Vietnam is trying to do. They've stated they want to see Vietnam be a modern industrialized country. They want to see the wealth of the people increase over the next few years. and for Vietnam to be a key part of the global supply chain. So that's in parallel to the themes we decided on several years ago around industrialization, urbanization, and the domestic consumer. And Vietnam is an open economy. They're open to investors, open to manufacturers. Vietnam's attracting many more products being made in Vietnam. Apple have recently announced that they're going to manufacture their iPad. Most of your footwear is probably made in Vietnam. And yet, although it's a conservatively run and organized political system, it's very much a capitalist system at heart in many ways. Just a couple of weeks ago, we had Prime Minister Chin, the Vietnamese Prime Minister. He was ringing the closing bell of the New York Stock Exchange, saying, we welcome the capital markets. We think they're a great tool to raise finance for the country. And we want to use that money to improve infrastructure. And that infrastructure has a multiplier effect. So Vietnam's just at the start of a continued multi-year journey of growth. The capital markets have grown significantly. Liquidity has improved dramatically, 5 times where it was 3 years ago. There's 1.5 million new investors added last year, domestic investors. So there's a real retail investor interest domestically in Vietnam. And we think that over time, Vietnam will get more recognized, will get re-rated, as its valuation is very compelling today. And great opportunity for people to look at something that's a little bit different, well managed, and hopefully well communicated, that both between ourselves as the manager and the board of the investment trust, we have good fact sheets and information for investors. We're very transparent in what we do. And the board are very active in managing discount. I think if you read Andrew's book, correct me if I'm wrong, Andrew, I think the average discount for investment trusts is somewhere between 5 and maybe 8%. Well, we were around about a 5% discount at the beginning of the year. We're currently about 13% discount. So there's still great value in the portfolio. You can buy it at a discount to its NAV. And we're the narrowest of the 3 UK listed investment funds in terms of its discount. So welcome people to understand a little bit more about what we do. And happy to take questions, James, and talk around our portfolio and what we're trying to do within our themes and within the market, and why we still think that there's tremendous value still to come.
Great, thank you, Craig. So just to sort of housekeep things slightly, somebody's saying they can't find your monthly fact sheets on the website. Would there be a good reason for that? Are they looking in the wrong place?
Well, that's they are on the website. There's a library section, and each of the fact sheets is listed there. Also, if someone just wants to follow us or fill in the contact form on the website, we'll make sure they're added directly and they'll receive it in their inbox as well.
Great, thank you. Okay, just to be clear with people, if you want to ask a question, just put them in the Q&A box. I know a couple of people raised their hands earlier, but that won't do anything, I'm afraid. Good. So you just mentioned the discount. Is there anything you actually do to sort of manage it over time? Or is it just something you'd like to see narrow because of the good, strong performance?
Well, we're fortunate to have a very independent board, and they take the discount very seriously. And there is a discount mechanism, control mechanism in place. There's a shared buyback mandate, which the board use. They haven't had to use it very much because they have good interest in the stock, but it's there. Over previous years, the board, with shareholder approval, have done some tenders at a very small discount to NAV. I think the last one was a 2% discount to NAV. And with the board, we as the manager, are active in communicating the story to investors. And trying to make people aware, A, about Vietnam, and then B, about Vietnam holding, our approach, our nimble approach to the market, and also about our strong performance. So, yes, I think that the board are very active, very engaged, and we think we're right-sized for the market. I know some people think investment trusts need to be several $100 million before they're useful. Well, actually, no, we're delivering good value. And we're nimble for the market, as we think we're right-sized for the market. Okay,
thank you. Could you talk about first, I think, Vietnam's relationship with China? So, to what extent are businesses that are manufacturing stuff in Vietnam actually Chinese businesses? And does it matter to Vietnam when China sort of shuts its borders for things like COVID lockdowns and things?
Look, most of the investors in Vietnam are not Chinese companies. They're South Korean companies, Taiwanese companies, Singaporean, US, European companies. So they're looking to take advantage of Vietnam's manufacturing expertise, its logistics, its linkages, and also the fact that Vietnam signed up to more than 15 free trade agreements, both bilateral and multilateral. So Vietnam has a much higher level of openness in its economy than, say, China. 200% of Vietnam's GDP through its import and export. And I think on a per capita basis, Vietnam exports more than China does. So it stands on its own. Yes, Vietnam is an important market for Vietnam. It's not the most important. The US is its largest export market. But Vietnam also sees China as a market it can export other things to, such as fruit and vegetables. So yes, when the borders were closed last year, because of strict COVID measures, there was a little bit of build-up of Vietnamese fruit and food at the borders. I think that's now cleared through. And there are some interactions with goods that come in from China. But partly because of China's position, that's why many of these multinational companies are looking to relocate to Vietnam. So Apple, after Prime Minister Chin rang the bell at the NYSE in New York, he was off to see Tim Cook at Apple. And Apple said, look, we've got 35 sub-assemblers in Vietnam for Apple products. We want to do more. And then about a week later, Apple announced that they're going to move some of the iPad production from China to Vietnam. So it's not really Chinese companies in Vietnam. There are some, there are not so many, but it's mainly the North Asian kind of assemblers, people like Foxconn as well. And they've been building components for Apple. They're also looking at the future. I think Foxconn announced that it sees an electric vehicle as a mobile car. So, in the future, maybe the manufacturing of EV components will also be done in Vietnam. So I think it stands on its own two legs and plays a very clever game globally. It tries to be subservient to none, but friendly to all. And this openness and the leadership it took in ASEAN a little while back, and leading the initiative on many of these kind of multilateral trade organizations and trade agreements. Vietnam's shown that it really punches above its weight.
We have seen some companies and countries talking about reshoring, so bringing stuff closer to home. Do you think that might have an impact on the country, or do you think actually net that actually the amount of foreign investment going in there means that you're still going to grow?
Look, net, I think it will still grow. The story for Vietnam as a global manufacturing place is very, very robust. I'm sure people will move some production from some markets, maybe to Mexico for the North American market. But if you're looking at the Asian market, then you want to be in Vietnam because you've got a large domestic market, but also you're well positioned in the regional ASEAN and broader Asian hubs. So Lego have announced at the beginning of this year, they're putting in $1 billion factory to manufacture those lovely little bricks for all of Southeast Asia and probably southern China. American companies are coming to Vietnam to invest so that they can export to Asia. So I'm sure that there will be more onshoring in some markets, but you can't onshore everything. And actually, Vietnam is a very quote unquote friendly place to manufacture. So it will probably be higher on the radar now for companies that want to invest, partly just in goods that are manufactured physically, but also in IT and tech. Vietnam's got a large growing tech business. FPT is a technology company, our largest position. And there's a great capability in Vietnam of IT engineers. So some people will put their technology in Vietnam because it's capable, it's cheaper than many other markets. So I don't think we'll see a global kind of total fragmentation of global trade, and a country only produces what it wants to consume. That doesn't work these days. So yes, there might be some balancing, but Vietnam, I think, is going to be a winner in this. And we're seeing a lot of evidence of companies still looking at manufacturing in Vietnam.
Tell us what happened with COVID, just briefly. In terms of how come Vietnam's completely sort of opened up and China hasn't?
Well, it's two stories. The first year of COVID, Vietnam was a pandemic winner, very low death, very low incidence, because it just threw its whole weight of its population to solve the problem and fight the war, which Vietnam's been very good at. Then in the early part, this time last year, Vietnam got caught out with the Delta variant because it had no vaccine, because the Western countries had snaffled it all away. But as soon as it could get vaccine, within 6 months, 100% of the population thereabouts double vaccinated, 50, 60% treble vaccinated. So because of the vaccination, it's been able to open the economy. So beginning part of this year started to open up, and in kind of April fully opened up. So it's taken a very different approach to China because it's got vaccines from the West and other countries that work, and its population are vaccinated. So it can open up cautiously, and then in the last few months fully opened up. There's no restrictions, there's no tests. Yes, people wear masks, but that's fairly common in Asia because they want to be, they care about their neighbor. It's a very Confucian kind of approach. It's you care about other people. And so they've really cracked it. And look, they hope that over time they can manufacture their own vaccines for the future for COVID and other things. Vietnam just recently started to produce a vaccine, I think, for African swine flu. So they have technology. Perhaps they wanted to create their own vaccine a couple of years ago, which didn't work. But they've been open to using, the tested vaccines that everyone else has been using in the Western world.
There's been a sort of long-running story about Vietnam getting upgraded from a frontier market to emerging markets. But I think part of the problem with that has been around controls on foreigners owning stocks. What's the situation with that now?
So Vietnam's the largest market in the frontier index. It's about 30%, but yet has all the characteristics of a fully emerging market. So as you say, I think the only obstacle is looking at the foreign ownership restrictions, which apply to certain sectors only, and certain companies can choose whether they want to be restricted by that or not. So I think eventually, because the government want the capital markets to grow, they will do all they can to remove these obstacles. They've already liberalized many of the market mechanisms within the country. They're putting in a new exchange system. They're moving settlement from T+3 to T+0, putting in central depository. And they want, the Ministry of Finance and the government want Vietnam to be an emerging market proper. So they will do everything that they need to do. But these things take time. I'm sure it would be a game changer for Vietnam in terms of its position when it is fully in the emerging market. But it's got all the emerging market, the positive emerging market characteristics already. So I think it may be interesting time for investors to look at it ahead of an increased liquidity that might happen further down the track.
You've got about 15% of the fund there in real estate. I know Vietnam did go through a sort of real estate boom and bust, and obviously in China's got problems with it now. What's the situation with that area of the market now? And is it different to China in terms of the sort of indebtedness and things?
Yeah, it's different, certainly different to China in terms of indebtedness. In terms of demand, I mean, if you look at the urbanization level of Vietnam, it's 37%, much lower than China. It's where Western Europe was at the end of the Second World War. So with infrastructure, be it a simple bridge, unlocking new areas, there's tremendous opportunity for these real estate developers. My wife and I walked across a new bridge in Ho Chi Minh City just a couple of weeks back, and already it's being marked out for new development. So, the demand will be there for the urbanization, the consumption, and the wealth is increased from the Vietnamese population. So for the good developers who have good land bank and experience, they should do well. Yes, there were some scares about some bad actors and people overgeared and perhaps looking to manipulate real estate prices for whatever purposes they choose. And a few people have been thrown in jail. Vietnam takes these things seriously. If people are corrupt or break the law, they get removed from their position or thrown in jail. No comment politically anywhere else in the world on those points. But for the real estate market, it's a long-term story. And we've seen good growth from the names we hold over many years. And we've known these businesses a long time. So there are also many components in real estate. We have some in industrial real estate, some in residential, and in different parts of the country. So I don't think there's a wholesale concern that perhaps has been in China. But the banks have been asked to kind of watch their lending levels to certain real estate companies and projects. because there were a couple of bad actors early in the year who got caught out. So it's a sector we like. We're underweight, and we're underweight banks against the index. So we are nimble around that. And we do look to add to these names when we think that the price and the valuation is good, and when there's new opportunities for them to really break through and grow their businesses. So we keep a very close eye on the sector. It's not, it doesn't have the same characteristics as China, in short, but still the great long-term opportunity as the economy grows and the urbanization increases, and the leverage effect, the multiplier effect of new infrastructure will be a key driver.
You had a fair old chunk of cash there in this thing. What do you do about gearing? Do you use gearing within the portfolio?
No, the fund's not geared, so there's zero gearing. Cash is normally maybe 3%. It was a bit higher. We took some profit from some names, and the market's been a bit volatile over the last couple of months. This new wave of retail investors that came in last year, a few of those when the war in Ukraine and global weakness unsettled them, and then a couple of high-profile arrests of bad actors in Vietnam. The market got a little bit skittish, and there were margin calls on some of those retail investors. So we saw it as a fairly volatile period. So we did. Fortunately, we had some cash, but we looked to deploy into good names as well. So, but we don't use gearing. We don't use gearing.
Okay, fair enough. What about interest rates in the country as a whole, and also the exchange rate? Because obviously that's one of the things that makes a big difference to returns.
It was very interesting. If you look at Vietnam over, say, the last 20, 30 years, its currency, the Vietnam dong, has depreciated by about 2.5% per annum. But over the last 5 years, it's been relatively stable, and the last year or so actually been strengthening. It's down a little bit in May on the back of dollar strength generally, but it's less of an issue than it was kind of 15 years ago when there was a lot of volatility in the FX market. And as a consequence of the money the country's brought in through foreign direct investment and through its trade surplus and overseas remittances into Vietnam, it's built up a very healthy kind of war chest of $110 billion. So that provides some good defense to the currency. And actually, interest rates are low, and the government's still able to allow kind of easing. Inflation is not so much of a concern yet in Vietnam and in other countries. We're looking maybe 3-4% versus 9-10 in other countries. And so the government is in a good position in many ways that it produces a lot of food. Half the electricity is through renewable sources. So it's not a Sri Lanka or Pakistan that's so reliant on that. So there's not a threat on its FX reserves, and the currency's been relatively stable. So less of a concern for investors now than perhaps 10, 20 years ago.
Great, thank you. I think we really have run out of time, unfortunately, because there's a couple of questions we'd like to ask, but probably have to leave it there. But thank you very much, Craig. That's really helpful. We'll. I know you do produce an awful lot of material for people to read, so we'll.
Check out the website and follow us. And people, if they sign up to the website, we'll make sure they get all the materials on a regular basis.
Great. Thank you very much indeed. So only leaves me to talk about next week. So next week, Richard here is going to be talking to Laura of AEW UK REIT. And then the week after, we'll be talking to the manager of Biopharma Credit. So thanks very much for tuning in today. Sorry, running a bit, and we will see you next week.